All right, so you're wondering maybe what are the tools that are really driving the crypto analytics space? Some of it is sentiment. We're seeing a lot of technical analysis tools out there, and we're seeing a lot of innovation kind of going in a new direction. We're going to dive into that today. My name is Paul Barron. This is TechPath. Welcome back to the show. Today, joining me right here from Miami, kind of our sister city here, is Jesus Rodriguez, who is the CTO and co-founder over at IntoTheBlock. Great to have you on the show, man.
Thank you, Paul. Pleasure to be here.
Very cool. Hey, Zeus, let's jump into a little bit about IntoTheBlock itself, what you guys are all about for those who maybe do not know what IntoTheBlock does.
Yes, so we're a company that is sitting somewhat at the intersection of data science and machine learning and crypto. Like we're trying to leverage cutting edge artificial intelligence, deep learning, machine learning techniques to extract insights for crypto assets across the board, whether that's using blockchain data sets, whether it's using order books, whether it's using derivative, other market data feeds, as you said, alternative data sets like social data feeds. And the company is a little bit over 2 years old. We launched the first version of the product in December 2019 with about 20 clients. And today we have over 150 clients, including some of the top brands in crypto, over 50 exchanges like Bitstamp, eToro, Binance. If you go to CoinMarketCap, you see our analytics, Gecko, Pair, wallets like Bitcoin.com, blockchain.com, many DeFi projects, many blockchain runtimes. And again, we go to work every day trying to analyze terabytes of data to extrapolate insights about crypto assets.
Okay, so let's talk about some of the integrations that you guys have done. Well, let's just use Coin Marketplace. That's a good place to start. What are some of the tool sets that you're providing to Coin Marketplace in terms of analytics?
Yeah, obviously, CoinMarketCap is the most popular website in terms of for retail investors. For any crypto asset that they list, there is a section called analysis that is powered by IntoTheBlock data. In their case, they're using some bullish or bearish indicators that are very user friendly and very simple to understand by retail investors.
Are you finding tool sets when retail investors, because I've seen variations on where retail investors are kind of leaning in terms of understanding kind of some of the directives. Obviously, we use IntoTheBlock on some of our own TA, as well as retail investors. We've seen things like Trade the Chain, which is more sentiment analysis, tools like that. Where do you find the most, the most retail confidence coming on what people are looking at? Historical, kind of the forward-looking sentiment? What seems to be the trend that you guys are watching?
Yeah, so it's all over the place. Like I don't think there is a single data set. I don't think there is a single technique that could be a leading indicator for alpha discovery in crypto. I mean, it's a very complex asset class, and as a result, if you want to really extrapolate actionable indicators, something that will give you a trading signal, it's a combination of many things. There are many indicators from other asset classes that could be adapted to crypto, particularly everything related to order books and derivatives. And then there are the things that are very unique to crypto, specifically blockchain data sets. There is a mountain of information that could be used both from informational purposes as well as for actionable purposes in trading strategies. And then there are common data sets like alternative, like social and things like that, in which crypto is definitely peculiar. Like if you look at traditional capital markets, feeds like Twitter or Telegram and all that are very low in terms of signal strength, and the signals tend to decay very quickly. In crypto, because it's so inefficient from the market behavior, news do move the market. So from that perspective, there is definitely some alpha opportunities there.
Yeah. I like that. You mentioned blockchain data sets, which I don't know that a lot of people completely, appreciate and understand. what those data sets can really reveal. Obviously, you've got trading volume, you've got, just like for instance here recently, the age of wallets out there, and if you look at what's selling and what's trading on the blockchain right now, there's a lot of data that kind of comes out of the blockchain data sets. How do you guys decipher on what type of data to track?
Yeah, look, so philosophically speaking, crypto is a new asset class with a different data footprint. So even since the beginning, one of the things that we established in as a principle in ITV was a new asset class should have a different set of indicators. It doesn't make sense to play crypto using the same rules as previous asset classes, although you can definitely extrapolate quite a bit. So blockchain data set is one of those sources of alpha that is very, very unique to crypto. What are the things that you can do? If you think about it, part of the behavior, the investor behavior of crypto assets get recorded in blockchains, right? Whether those are aggregations of trades that you do in a centralized exchange, whether those are trades that you do in a decentralized exchange or things like that. So you can aggregate that information and analyze patterns of funds moving from one place to another, funds going into centralized exchanges that could be a sign, like if you see an inflow into an exchange like Binance, could be a sign that a lot of positions are going to be liquidated, which many times cause a price drop. In the short term, you can see what miners are doing, you can see what whales are doing. And one of our analysts uses this phrase that crypto is very obsessed with ownership indicators, right? The crypto community. So, because looking at blockchain data sets, you can derive some intelligence about who owns what, right? Like people that hold crypto for a long period of time versus the one that actively trade, the size of those funds that they own, the frequency of trading, who are they trading with. So it's a mountain of information that is very unique to crypto, and you don't get that anywhere else in any other asset class. And trying to understand how that manifests in terms of price movements, what's impacting price movements is part of what we try to do every day.
Okay, so definitely when you look at blockchain data sets, it seems like there could be an entire new data science being developed right before our very eyes around
Absolutely.
what people are looking at. Yeah. So are there particular areas that you guys are focusing on that you feel like this is the next evolution over the next few years?
Yes. So in addition, one thing that I probably skipped in the introduction of IntoTheBlock is that we have two divisions. So one division, we provide a lot of data science indicators to retail and institutional investors. The other division, we sort of eat our own dog food and try to build quant strategies that leverage that intelligence in the form of actionable quantitative strategies that try to systematically discover and operationalize alpha in the market. One area that we're very, very focused on these days is decentralized finance. So we think that from a philosophical standpoint, DeFi encompasses sort of the key principles of what crypto is supposed to be. And then from a technological and financial standpoint, we think it's a new evolution in capital markets. That even when you look at something like Bitcoin, yes, it has started a new asset class, but in terms of the trading trails, it's very similar to other asset classes like commodities or currencies or equities or bonds, it's centralized order books and things like that. DeFi is different. Right? DeFi is you're playing with protocols, it's all on chain, it's smart contracts, it's composable, it's programmable. So we think there is gonna be a new set of asset management platform, asset managers, asset management tools are for that ecosystem.
Yeah, I like that. Well, I think you're right. You know, the potential for asset managers, especially as we start to see institutional capital really move into the space and really kind of create, kind of those cottage industries that will really start to develop. The tool sets that are going to be utilized are going to be pretty cool. I want to jump over to what you guys are doing here, right here with CoinMarketCap. And I want to look at Ethereum quickly. And I just wanted to kind of show the audience for those who maybe are not aware. This is essentially what Jesus is talking about. This is essentially, as you can, I think you guys have your logo up here. Yeah.
Mhm.
Yeah, it's right there. Yeah. Okay. So IntoTheBlock right here. Data analysis. One of the things that I'm kind of curious on, especially with Ethereum, where you look at what's happening in Ethereum right now, we're seeing a lot of trading volume, and what some people think we could be looking at a shift in where Bitcoin and Ethereum diversion could occur. Are there any plans with looking at where trading volume and those types of things could be layered into these token summary modules that you guys have currently?
Yeah, so those token summary modules are intended for to try to give like a very simple indication to a retail investor, maybe without having to deep dive into a very complex research. So it tries to give you a bullish or bearish signal based on statistical models for a single indicator. Obviously, no single indicator can predict the market. That's typically a really bad idea, although some people do like the simplicity of that thesis, but trying to come up with a market thesis with one number is a very fragile thing. So typically you need to combine many of those. The part of the growth in Ethereum in the last few months has been definitely driven by the growth in decentralized finance. So DeFi has been
Right.
one of the factors accelerating the growth on Ethereum, and because DeFi on Bitcoin is relatively uh, um, non-existent, so Bitcoin doesn't have the same factors causing the market momentum. In the case of Bitcoin, there are other things that have been responsible for the bull market and now the few market corrections that we have had in the last few weeks. So if that thesis continues to hold through, Bitcoin will continue to evolve more as a store of value type of thesis driven by institutional players coming into the market and things like that, where Ethereum will continue to evolve more on a platform play driven by new protocols being created and the increasing adoption of those vehicles.
Are you so when you look at developing essentially kind of these indicator signals and how those can kind of apply to either something like a coin market cap analysis or even your own service of applying that. I'm kind of curious when you look at on-chain signals versus exchange signals.
Mm-hmm.
So on-chain, obviously, you're pulling the data sets out of the blockchain
Mm-hmm.
itself, applying those
Mm-hmm.
measurements, trying to do some analytics there. From the exchange signals, is that mostly just traffic and volume trading, or are there some other indicators that can kind of come from the exchanges that can help you guys give us users some better insights to where the market might be going?
Yeah, so we tend to combine both. I mean, we do some analysis at the exchange level that is just traditional order books, spreads, and things like that, and we try to combine it with a blockchain footprint. Now, there are a couple of things related to exchanges that we think are very unique that we do. Like, for instance, we use a lot of machine learning to detect wallets on chain that belong to exchanges. So we can look at wallets and say this belongs to Coinbase, this belongs to Binance, this
Right.
is a deposit address for Coinbase or a withdrawal address for Binance. And using that, we can monitor money funds going in and or out of those exchanges. So if you see a massive inflow going into one of those exchanges, many times that's a leading indicator that those positions might get liquidated or things like that. If you see a lot of money moving out, might be investors taking gains or moving to stable coins and more like a risk off type of approach. And again, that's how much money would you pay to know how much capital is flowing into NYSE or Nasdaq. You can, but
Right.
with a decent degree of approximation, you can do that in the crypto space.
Yeah. Talk to me. Okay, so I think there are going to be first of all, kudos to what you guys are doing with like CoinMarketCap. That's one of the big tools we use, and I know that that's one that I think a lot of people kind of hedge to, and at least when they're trying to understand a particular currency. How far into the index are you going in terms of the number of coins that you do analysis on, the number of projects that you're currently tracking? How deep are you guys going?
Yeah, I mean, this market is just starting, so we try to not neglect anybody. So we're doing, at the moment, we're supporting over 700 assets and about 16
Mm.
tier one blockchains. And we're adding more. So it's a matter of resources and devoting more engineering power to that because it's very complex to analyze one of these ecosystems. From scratch, we're fascinated by what friends at Algorand are doing. They're actually
Hmm.
an investor in our company. We're fascinated by Polkadot. We think Solana is super interesting. The same with Avalanche. So there is a very new ecosystems created by new blockchains that have all the ingredients to have meaningful traction in the foreseeable future. So we should be providing intelligence from.
Yeah, well, I think this is going to be one of those things that we continuously see really to grow. I guess the question I have is, as we see the institutional markets really start to play into us, and most likely we're in, even though some people would say we're still in a little bit of the bull market with bearish signals, but the likelihood is that the next layer of potential investment opportunities are going to be coming from more and more structured capital. Any kind of plans that you guys are going into in terms of providing more advanced tracking and quantifying type solutions for the more structured asset managers?
Yeah, so when we started into the block, like when we look at the landscape, we sort of realized that the initial adoption was going to be by crypto people, so retail for the most part, and some crypto hedge funds or quant funds, but certainly not traditional
Right.
asset managers. That has been changing a lot. Is we're going to have to see how it plays after the recent market corrections if that scares some people away. But we're definitely providing more intel that is catered to those type of institutions. For instance, one of the things that we launched recently that is completely free and very simple to use is this section that we call Capital Markets Insights, in which you can analyze Bitcoin and Ethereum in particular against popular equities. You can look against tech
Ah,
equities or crypto equities, popular ETFs. Like you can look at ETFs for a specific, the Renaissance IPO ETF, like companies going public, or some specific either thematic or geographically oriented ETF. You can look at it compared to commodities and as well as market indices, so the S&P 500, the Russell 2000, and things like that. And that's very simple to understand, but it gives you a perspective of how crypto is behaving compared to the rest of the market. And that's the type of tool that somebody coming from traditional capital markets can use.
yeah. Okay. All right. So we see social playing a part of this. We see the blockchain data sets also playing into this. Are there any outliers in terms of data sets that are out there that potentially could make a play into understanding how to kind of compile where a lot of these signals are coming from? Like if you look at, let's just say, I don't know, we use Webull's trading platform, which has a great interface into the financial standing
Mhm.
of a particular stock. I'm kind of curious, anything out there that's going into depth around the projects themselves that are in alignment with some of these tracking quantifiable data sets that could also align well with maybe, like for instance, if I was looking at Cardano, I could see how far along Alonzo is in real time, those kind of scenarios. Any plans of doing anything like
Yeah.
that?
So if you look at the evolution of traditional quant finance, and obviously in traditional capital markets, the alpha decay, meaning models, strategies become useless very quickly because the markets are so efficient, right? So you could have some
Right.
edge for some small period of time, but you need to constantly be on your game and be versioning that. So in those markets, there has been an explosion of what is known as alternative data sets. That is things like, I don't know, monitoring parking lots of people going in and out of
Mm-hmm.
stores,
Sure.
or oil shipments, and things like that using satellite images. So that's in crypto is the opposite, right? The market is very inefficient. So you can discover things that work for a very long time. because the market is still not at the level that those signals will correct themselves to efficiently very quickly. That's going to change, and the way you should think about it is, as the market becomes more efficient, then you need an edge in terms of the data set. So the mainstream data sets will start losing the strength in terms of the signal they provide, and then you need to move more to the periphery, to the things that you sort of mentioned. Now, the examples in crypto, whether a team like IOHK and Cardano, that by the way is one of our customers, they are hiring more aggressively or less. That could give you a very temporary thing, but I don't think that long term is a very sustainable signal. We think there is so much richness of information in blockchain data, in order books, in derivatives, in social, that there is a lot to be done there. Like for the most part, like we don't even understand how a lot of the blockchain analysis, we haven't taken it to its full extent. And then in the case of social, uh, the tools, the techniques that we use to analyze natural language have come such a long way in the last
Right.
3 years, let's say, with things like GPT-3 from OpenAI, those type of transformer models, that now you can do things that were unheard of just a few years ago, right? So it's probably worth trying to apply those tools to crypto and see what they show.
Yeah, for sure. I want to hit you up on a couple of last topics here. One is robo investing
Mhm.
and advisory around this. We see some platforms that have started to develop in, AI controls to help robo investing kind of work. Haven't seen, a huge amount of success yet in it. Maybe the AI and the software stack just isn't there just yet. But I wanted to hear your thoughts on where you think that's going to go in the future.
So I have some very strong opinions about this, and not to. I think there are some phenomenal projects trying to tackle this challenge in crypto, but from the traditional robo-advisory perspective, I think it's fundamentally difficult to come up with something that works in a single asset class. Like if you look at the big robo-advisors like Betterment or Wealthfront and all that, their entire foundation is based on diversifying across index products like Vanguard or things like that go across many different asset classes. Doing that in a single asset class like crypto is difficult because there are many scenarios in which the entire market is down, right? Like how do you diversify the exposure in the same way that there are times in which all commodities are down. So if you have a robo advisor just for commodities, it's a very vulnerable sort of spot. The second factor is that crypto is very inefficient as a market yet. So you get like a 50% drop in 3 days, right? Like there is no robo
Yeah.
advisor that can tolerate that. It doesn't matter which techniques you're using. And then crypto as an asset class is fundamentally active, and robo-advisors are designed for passive investors, right? So the whole
Right.
so the entire theory of robo-advisors is based on beta and smart beta investment. So the famous FAMA French theory that you can model the market with three, four, five, six, seven factors that describe the whole thing, and you should not try to. Most investors fail to beat the market in the long term. I believe that markets are sort of efficiently inefficient type of thing. Like you can find pockets of inefficiencies and capitalize on that alpha. Crypto is very inefficient and very active. So passive
Yeah.
investment in crypto is fundamentally hard. Even some of the stuff that we do in DeFi that could be considered passive in the sense that it doesn't trade more than once or twice a day, but then you're earning massive return, alpha-like return. So I don't know if that could really be considered beta from an investor standpoint.
Yeah, definitely. I would have to agree with you there on kind of where that direction is going. Do you feel like the AI is in place now that could be utilized in solutions like what you guys are doing, or do you think we still have a little ways to go?
No, look, the evolution of machine learning and deep learning in the last 7, 8 years has been tremendous. We're living the golden
Hmm.
era, the renaissance of machine learning and deep learning since sort of the team from DeepMind created AlphaGo that beat Lee Sedol, the multiple time Go world champion. That created what
Right.
we call a Sputnik moment sort of in AI, right? So you have an arms race between the United States and China trying to advance AI research. And you see what Google, Microsoft, Amazon, Apple, Facebook, Uber are creating, and it's mind blowing. So today, the techniques are here, the technologies are here, the open source stack. I mean, the amount of analysis and technologies that you can do today is something that you couldn't do just 5, 6 years ago. So it is
Yeah.
today, well, you have the entire arsenal at your disposal to come up with like super comprehensive and unique analysis. The thing is, more from a market composition standpoint, I don't know if there is still a lot of data science talent working in the crypto space. I think that's still,
Hmm.
you need an influx of real machine learning hackers working in this space.
Right. Yeah, I think you're right. It's, we're dealing with kind of this next generation of tool sets that are coming on us, and the ability of the advancements that we've seen, like you had mentioned, in such a short time, which is why I think we're seeing advancements in so many different places, from chipsets to autonomous driving, you name it,
Mhm.
things that we cover here on the show quite a bit, and obviously within the cryptocurrency space itself. Last topic, and that is current situation with the market correction that Bitcoin is under right now. As
Mhm.
of filming today, we had dipped under 32K.
Mhm.
Where do you see this market going in the next, say, 6 months? Is this one of those things that we could see a long drawn out kind of, kind of a mushy market, or do you feel like there's some movements here that are potentially in the waiting?
Like I tend not to do like long-term forecasts because again, crypto changes a lot. I definitely think it's here to stay. So it's Bitcoin and large market cap cryptos are not going anywhere. A correction was long overdue. Like you cannot go from
Yeah.
3 to 60 in a few months and then expect that nothing is going to happen. Investors are going to take gains. The sentiment is going to shift. We're just coming out of a very uncertain economic climate that the U.S. have navigated
Yeah.
better than others, but in the rest of the world, it's been very tough, and there is more of that to go. We're seeing also a lot of bearish momentum in other asset classes. So it's just from a numbers standpoint, I was looking at it this morning. It might still drop a little bit lower, and at the same token, I don't see in the case of Bitcoin a ton of resistance going up. So it could go close to
Right.
40 very rapidly as well.
Yeah, for sure. When you look at kind of the evolution of the digital currency space and where China is moving with the digital yuan, we've got El Salvador and other countries now that have said, hey, we're going to standardize on the blockchain. Potentially, this becomes a domino effect across the world, could be very quickly, maybe within the next decade. Do you feel like we're close before we'll start to see heavy adoption at some of the levels in which we've seen just these toe taps here recently with things like El Salvador and what China is doing?
Yeah, look, to me, digitizing central bank currencies is a no-brainer. From a technical standpoint, obviously, there is a ton of regulatory things
Sure.
that go into it, in which I'm not an expert on. But in terms of the type of applications, the type of services that you can enable with a digital currency, is a no-brainer. So I believe El Salvador might be too small of an economy to cause a chain
Right.
reaction, but is definitely it is definitely a factor of influence as other countries look up to that example and see how it performs. I think something like the digital yuan and what China is doing with its blockchain projects is fascinating, and it's going to push other economies to take action.
Yeah, for sure. Jesus, it's been great having you on. Thank you so much. We definitely want to get you guys back on the show soon. So kudos to everything you're doing over there at IntoTheBlock.
Thank you very much. It's been a pleasure. It's been great.
Excellent. All right, so maybe you guys are tuned in over on the podcast. Make sure and give us some stars over there, and we love your feedback as well. If you're here on the YouTube channel, make sure and subscribe, hit the bell for notifications, and of course, if you have an idea for a show and you want to send that to us, just shoot us an email to producer@revernetworks.com. You can always hit me up on Twitter @Paul Barron. We'll catch you next time right here on TechPath.